Welcome to Bitcoin. All roads lead to BTC.
Welcome to Bitcoin. On this Bitcoin-based finance channel, our goal is to show you that all roads lead to BTC. Like, share, and subscribe. It really helps the show. And stay tuned. Today, we're discussing last week's market crash and where the market is headed this week, in addition to the upcoming Bitcoin core deployment and why it's so controversial. Without further ado, let's get into it. So on October 10th, around 5 p.m., late afternoon, President Trump announced that the U.S. would impose 100% tariffs on Chinese imports. This would be effective November 1st. And the result, the market reacted sharply and had what we can only describe as a significant crash. Now, there's strong talk in the media and speculation that there's a large crypto whale. That's someone who moves, buys, or sells a lot of Bitcoin. They placed a sizable short bets just moments before the announcement was made. So whether that trade constitutes legally as insider trading, it's still unclear. But this was a significant move in the market. We're going to talk a little bit about that as well. So first of all, the Dow Jones fell about 385 points. This is about 0.8%. The S&P 500 down about 1.25%, and the NASDAQ dropped 1.75%. As this is Welcome to Bitcoin, let's talk about Bitcoin. So at the time of the announcement, in the immediate aftermath, Bitcoin plunged sharply. It dropped below 110, with some futures paired as low as 102,000. And that's a significant drop in such a short period of time. According to reports, more than 19 billion as on leveraged positions across crypto was liquidated within 24 hours. One report shows that 9 billion was liquidated in 24 hours, 7 billion in one position. For altcoins, they suffered heavy, some down as low as 12%. That's Ethereum and Solana. They got hit pretty hard. Some sources say more than 1.6 million trader accounts were liquidated across crypto platforms. According to the crypto data aggregator, more than 17 billion in leveraged positions were wiped out within 4 hours of the tariff news. Let's talk about the whale for a minute. A number of crypto news outlets report that a whale placed massive short positions just minutes before Trump's tariff announcement. For instance, Coin Central reports that the whale made over 160 million in profit from shorting Bitcoin and Ethereum, capturing gains by correcting the timing of the decline. So this whale clearly had some insider information that helped them place this bet in a timely manner. The trader reportedly closed the Ethereum short fully approximately 72 million in profit and still holds 92 million in BTC shorts. And that's with over 5 times leverage. Some claims go further that 30 minutes before the announcement, the whale doubled its short exposure, anticipating the shock from the tariffs. So none of the reports present concrete proof that the trader had inside information from a government source. We can speculate, but it's very hard to prove these things. So as for now, the speculation remains unverified, and no regulator has announced any formal investigation or legal action. In the crypto space, transparency is limited, especially across multiple exchanges. So what we gotta ask ourselves, is this illegal or is it inside trading? Well, in traditional finance markets, equities and commodities, insider trading laws forbid on material, non-public information, but applying that concept to crypto is legally ambiguous in many jurisdictions, particularly when the information originates from political or policy announcements. So it's not so much tied to what a private industry is doing. This particular incident is around policy. So to be illegal insider trading, one would generally need to prove that the trader had non-public material advanced knowledge of the announcement via government leaks, and if they acted upon that. And that's going to be difficult to prove. At the same time, this particular incident may pave the way to crypto legislation and regulation in the future. So just to wrap it up real quick on that particular topic, the tariff announcement acted as a catalyst. It injected fear and uncertainty, and it triggered margin calls across the markets, and stop losses began to cascade. So the presence of the whale taking large directional bets just ahead of the announcement is highly suspicious, but not conclusive evidence of it being illegal insider trading. The crash underscores how fragile and highly leveraged the crypto markets are when faced with geopolitical shocks. Without access to private communication, exchange level data, or regulatory findings, we can't really definitively determine if the whale's moves were illegal. So where do we see the market heading on Monday? Because this announcement was made around 5 p.m. And while the Bitcoin and the crypto markets are open 24/7, the conventional markets were closed after that. So I could see a little bit of a bloodbath on the stock market side, but at the same time, when we're talking about financial instruments paired with Bitcoin, you have countless Bitcoin, treasury companies, Bitcoin mining companies, and you can even get into the, the ETFs and instruments around that nature. How are they going to react Monday morning? That's still to be determined. However, there are some couple scenarios to consider. So the bullish scenario suggests that Bitcoin could stabilize around 109K. The last I checked today, it was around 113K. Still, some analysts are saying it's going to stabilize around 109K after the correction. And that's the bullish scenario. They point out that this area corresponds to lower boundary of symmetrical triangular patterns that might act as a support. And if the market stabilizes and the risk sentiment improves, or at least stops deteriorating, Bitcoin could attempt to rebound or relief. And with Bitcoin, there's always room for some all-time highs. Here's a forecast. Some forecasts suggest medium-term targets like 160K are still in play when you take into consideration the macro sentiment of recovery. So let's look at the other scenario, the bearish scenario. So if macro risk, trade war escalations, weaker growth liquidity withdrawals persist, Bitcoin could retest the lower support zones, potentially 100,000 or even a little bit lower. So in that case, further forced liquidations and sentiment is weak. It could push it more towards the downside. The immediate bounce might be limited if buyers remain cautious and the macro headwinds are strong. So let's consider the likely scenario for Monday. Given the shock, Monday may be volatile. We could expect a morning reaction as US and European markets open, where Bitcoin could dip further if equity risk remains soft. Potential recovery attempts if buyers step in, especially if broader risk assets stabilize, or if there's verbal cooling from politicians and the press trying to calm the markets. We could see a tight range intradays as bulls and bears test levels. As we mentioned, 109K to 115K. If the sentiment turns more positive or macro signals improve, the rebound may be stronger in the later part of the day. Still, it's pretty early to determine if Bitcoin can go anywhere. So let's just stay tuned and see where the candles take us. The next story we want to discuss is about Bitcoin Core. And for those who are unfamiliar with Bitcoin Core, this is the underlying software to run a Bitcoin node. What's a Bitcoin node? Essentially, Bitcoin nodes are what keeps Bitcoin alive. Every node has a copy of the Bitcoin blockchain, and the blockchain is just a record of every single transaction that has ever been made for Bitcoin. There's several ways that you can run a Bitcoin node. The most popular one is Bitcoin Core, which I believe was the original one brought out by Satoshi Nakamoto, the creator of Bitcoin. But there are third-party ones, softwares that you can run Bitcoin nodes on as well. And we want to look about the change and why it's so controversial. So if a node operator begins favoring knots over the client over core in large numbers, several technical, economic, and government consequences might unfold. Many are speculative. So you could see a divergence in default policies, relays, and rules. Because knots enforces a stricter op return limits, it would refuse to relay or accept large data-bearing transactions that core might accept, or the new core version 30 defaults allow. So what we're talking about with this op return, and I'm kind of getting a little technical, I don't want to get too technical, but my understanding, it allows a Bitcoin transaction to store more data. Meaning, you could essentially put a picture of a monkey on there, like Ethereum is so popular for, or a form of NFT. And while I feel there's a market for that, I don't feel that it's Bitcoin's responsibility to do that. And there's a lot of folks who agree with me, and there's controversy in the Bitcoin space right now over where Bitcoin Core is going. So over time, network peers running different software may develop slight asymmetries, which transactions each sees or propagates. If a subset of node refuses to relay transactions, those transactions may have difficulty propagating to miners or other nodes, reducing their inclusion. So this could create islands of policy disagreement through as long as the underlying consensus. Interesting. There's also potential for soft divergence and adoption. There could be pressure on core to adjust or compromise. And there's no guarantee, but there could be a chain split, or what we know as a fork. And this is because Bitcoin Core, as I mentioned, they want to let folks put monkey pictures and all types of, some would call it garbage, onto the blockchain, which makes the blockchain heavier. It could have slower transactions. You have knots, on the other hand, that says they may refuse those transactions. And as I mentioned before, the blockchain is just a record of every single transaction. Whereas you have Bitcoin Core, who would have more transactions with monkey pictures and everything, just all types of different Bitcoin transactions. You might have a leaner Knots, on the other hand, that refuses to add those pictures and things of that nature, and that could result in a chain split. So it's important to emphasize, as long as consensus rules are unchanged and all clients obey the same rules about block validity, a chain split is not inevitable. Knots does not, as of corresponding current reporting, introduce a conflict to the consensus rule. But the risk of unintended forks, miscoordination, or divergence in user behavior increases. In the worst case, if core and knots diverge sufficiently, or third parties begin to push alternative rules, a consensus level fork might become possible that would require broad coordination and deliberate conflict. So, Bitcoiners keep me honest. Bitcoin SV, Satoshi's vision. My understanding is that it was once part of the original Bitcoin, but then it forked because SV wanted to do, it might be on the block size, I don't recall, but they wanted to do something different. And ultimately it became a different Bitcoin, Bitcoin SV, Satoshi's vision. And I believe it might be Bitcoin Cash that has the green Bitcoin symbol, but either way, it's a different, it's not BTC, it has a different ticker symbol, it's a different digital asset, so to speak. And something similar could happen with this so-called node war. But this is an update, it's more of a technical tweak. It's playing into the long-running debates about what Bitcoin is for pure money versus data as well as money. The core risk is not necessarily a fork, but a fragmented node behavior, propagation, asymmetries, erosion of consensus culture. So it's also possible that the usage patterns of self-regulate, even though nodes permit more data, users may avoid it due to cost, efficiency, and reputational risk. So the final release of Core 30, you have to see how aggressive the defaults will be. And by that, I mean, like, what features are they requiring you to use? Like, are they going to mandate that nodes running Core 30 accept every Bitcoin transaction that's storing excess data like pictures or NFTs or what have you? This is something we have to determine. Additionally, the statistics of node software distribution, core versus knots. You have to look at that over the coming weeks. Moreover, the emergence of safety nets, fallback policies, and optional caps and filters. Any signs of miners or wallets refusing to support extreme data embedded in the transaction, this is something you have to look out for too. And that pretty much wraps up the show. We discussed about the market risk, the market crash, the risk of where the market may be going tomorrow, the bullish and the bearish scenario, as well as Bitcoin knots versus Bitcoin core, and which one's going to come out on top or fourth. Who could say? Still, welcome to Bitcoin, episode 1. Thanks for tuning in, folks.